Hello friends, welcome to another episode of Chart Guys How to Trade. In this channel we talk about trade setups and apply trade theory and talk about trades as we experience them and sometimes as they happen live. In this case we have a trade on APHA. It was a short, and before I get into it I want to show you what caught my attention to this trade, and that was Dan's live coverage this morning of APHA talking about the volume climax that he was observing. I was listening in, I jumped on the trade based solely on that information, and we'll talk about that. But first, let's listen to Dan as he talks through the trade setup.
So in spotting climax candles, when you look at APHA and you say, okay, we've run pretty much 10%, maybe 9% since the open. We haven't seen any 5-minute consolidation, and you can tell because there were 2 minutes plus left in the candle that we were going to see the highest 5-minute volume candle of the morning. That gives you a real good indication that a potential temporary top is shaping up. Now we zoom in and we are just looking for a 2-minute high or low at this point. But I just use those volume climaxes for either bounce entry guides or for profit taking guides at tops or for shorting guides.
So I like to use that volume climax as a potential area of interest for me when I see it occur at the top and bottom of trends. Now, the reason for that is because I can use it to scout entries, first of all. But why can I use it to scout entries? That's the big kicker. Why is that important, and why is it something that we're watching for? Well, on the 2-minute time frame here, we can see a nice example of how the bulls are applying pretty much steady pressure. There are a couple moments where bears have the opportunity to apply pressure, but it's more or less just equal. Bulls are taking a break. When you have a volume climax like we see on the 2-minute time frame, what we're getting is the same amount of bull pressure to the upside, but now it's being matched by equal pressure to the downside, which is giving us a net zero balance, but a massive increase in volume. It's doubling because we have both up and downside pressure. What that can indicate is a shift in the short-term direction of a stock. It means bears are ready to apply pressure and they're not fooling around anymore. So unless the bulls can continue and outpace them, which is very hard to do when we are overbought on the 2-minute and likely the 5-minute time frame by this point, we start to see a change in direction. And it's also indicated with this big upper wick here. So what I do, and when I did in this case, was I was watching the volume, and I jumped into the trade pretty quickly, based pretty much solely on Dan indicating there was a volume climax. I knew what APHA was doing at the time, watching it in the periph, and on the 15-second time frame, I am watching this now and looking for that short entry. So really what I want to see is the loss of the most insignificant volume, or the most insignificant level on the 15-second time frame. I'm looking for as minimal risk as possible. So here's a little push down. Now I see the bull set a new high. Now I've got a 15-second level that I can work from. So I'm going to jump right here. And if we lose this level, I am going to be interested in a short position. So we come down, we break, I initiate a position. I think my average was 15.08. And immediately I am willing to stop out at a new high a day. So I set my order as soon as I can. I set my stop, and at that time I have to zoom out, take a break, and get some context for a situation that I just got myself into based solely on this position. Now I'm comfortable in the sense that I got my stop. I'm not going to be surprised if I immediately get stopped out. What I need to do is go and look at the context of my trade. What the heck is happening? I go to the 15-minute time frame first. Then I don't see too much of interest, except I do see this 1523 level over here. I'll plug this in on the hourly time frame, continue to look to the left, and I see one more area of resistance that may be interesting to me, a 1520 level. So we've got short-term overbought conditions. We've got a volume climax indicating possible reversal and against a key level of resistance on multiple days or 1-2 days. Things aren't looking so bad here. So what now I need to do is determine what my target is going to be. Well, I see that we've built up a lot of resistance or a lot of support on the 2-minute time frame. We have 14 psychological, we have this higher low and this higher low as well. So what I'm going to do is watch for the 2-minute time frame to give me a lower high under 1520. I am okay for the price to come down and come back up. Ideally, I don't get stopped out, but what I need to do is allow the market a little bit of breathing room. Just as we establish higher lows on the way up, we need to allow the market to push down and establish lower highs. So there's a possibility that if you entered at the wrong time, you're going to enter here, you're going to be in red for a little bit before you come back down. That's why it can be a little bit dicey playing against the trend, and often why new traders tend to buy at moments of confidence right before we start to see a turn and they're facing a little bit of red, which can be a little bit overwhelming for a new trader. Not something they want to experience. So we are in our trade now. We are going to allow for the 2-minute bulls to fight it out. Our high and our stop is set at 15.20 or 15.21 in my case. And we're going to push the price down. We can see that we are moving down very nicely. We're going to give these bulls a little bit of an opportunity to establish lower highs. But on the 1-minute time frame, they're not really getting a lot done here, are they? All they've really done so far is push to this high, 15.07, and they're just sort of dawdling around. So we're going to move to the 2-minute time frame, and what we're going to look for is a more effective 2-minute lower high. What we want to see is a substantial-ish move to the upside and continue this sort of trend like that. So do they do it? Do they pull it off? Well, it's important that they do, because what we need to do is be able to use these levels to establish ourselves a new lower high to trade against. We want to give the bulls and bears an opportunity to fight, because once they fight and once we have a victor that works in our favor, we can move our stop loss down. So my stop loss gets moved to just over 1485. Why 1485? Well, because if the bulls are able to push up and break 1485, that shows that the bears no longer have momentum and we are shifting into an unknown situation, wherein we can go sideways or we can go up. And if we go up, well, that's not great for my short position. So I continue to drive the price down with my sheer will, I guess. I meant to say I continue to watch the price move down, and I keep waiting for these unique opportunities to establish lower highs. Now you can see most of the action here isn't really happening on the 1-minute time frame or even the 2-minute time frame. It's very nice and tight, and the range that we are getting between our last high, our 1485, and this very, very tight range opens up the door for a substantially lower high under 1485. The distance here increases the likelihood that we are not going to break 1485 on our first attempt. So that is okay with me. I am happily in my short position. Here's a nice little push to the upside. Nice little increase in bull volume. So we're still looking for that lower high under 1485. It can happen really anywhere. It can go all the way back up, all the way back down. We continue to watch. We see a little bit of resistance. Now we pulled away enough from that level that I'm going to be comfortable to move my stop down to 1445. Now, the reason I'm doing that again is that if we come down and we establish 3 red candlesticks in a row, change direction and break our 1445 level, that's going to be a 2-minute trend change. That's not something I want to be in the wrong side of. So we allow the bulls and bears to fight it out. 1446 is where we've got our stop loss. Now we're coming down to break and test 1422, trading sideways just a little bit. Is it enough for me to move my stop loss? Not quite yet. We're moving down, and now we have had a substantial shift again from this level. So our high on this candlestick is 1433. We continue to drive down. In fact, I'm going to be comfortable enough to move my stop loss down in this case. We continue to grind, slowly moving. 1407 is our new low. Break it again. Happy to move down our stop loss one more time. Now you notice a pattern when I'm talking about these trends. I often like to just let the market decide when and where I'm going to take my entries by breaking these trends of 2-minute lower highs and lower lows. What gets interesting in APHA, and that's something I noticed until I did my post-trade analysis, was I missed something pretty important. And you're going to kick yourself, and I certainly kicked myself when I saw this. We broke $14 and we didn't get any follow through. Okay, we do it again in a second here. We break it without any follow through. And you know what? We do it a third time without any follow through. 3 breaks of low of day without any follow through. I should have stepped back and said, okay, something's going on here. I can keep walking my stops down for sure. Not a problem. 2 cents is 2 cents. I'll take it. 14 cents. I'll take it. Now what's key and what I noticed afterwards is if I zoom out and I look on the hourly time frame, I can see that we had a big hourly formation over here. Let's embiggen that a little bit. And this big hourly bar is a broadening formation. It knocks out horizontal supports and resistances. They don't really matter anymore. They matter, of course, but it does open the door to these broadening formation supports. So here's one. We connect this guy to that guy. It's the lowest point it knocks out while still being a downward sloping line. And to a much, well, it doesn't really matter too much for this case, but we would do the same thing over here. If we go to our 5-minute time frame, we start to notice something. and let's go back to our 2-minute actually. Our lower lows without any follow through coincide perfectly with that broadening formation support. I should have been watching that as my area to cover my short position. I know how they work. I know how common, I know how effective they are. I should have been paying attention to the larger time frames instead of just walking down the stop losses. So that's another lesson I learned. Again, one of those lessons that keeps cropping up and getting into my logbooks. But that's not what I did. I didn't take my exit at the broadening formation support. I just simply rode down the 2-minute time frame, and we ended up in a little broadening formation of its own, and I ended up getting stopped out here at 1422. So overall, a pretty interesting setup. The rest of the day continued on as it often does. Let's just load that up. So yeah, I wasn't a terrible place for me to cover that short, but let's summarize. So we had a big Mondo bull break. We had a volume climax in the 2-minute time frame, and there you can see that 2-minute volume climax certainly stands out compared to what had happened before. Against an area of resistance, we learned after the fact. We should have been aware of that as we got into the trade. Then we start to see some subtle changes on the 15-second time frame. We see a lower low, and then we have a nice level to work against for a stop loss. That can probably be the hardest part of shorting any sort of stock that is on a nice bull run. You need to accept the fact that there is a great chance that you're going to get stopped out. So that is why we want to be as close to that high day as possible while still seeing subtle signs of shifting. So what did we have again? We had the loss of our 15-second higher lows. We had the volume climax, which is our real big bat signal in the sky. And again, we've got our high of day, which coincided with some resistance. So placing a short and covering almost immediately at a new high is the safest bet, and that's how I like to do things. From there on, we allow the market to give itself a little bit of breathing room, lower highs, lower lows, and we continue to ride that trend down until it changes. And the bonus lesson, keep an eye out for those broadening formations. Keep an eye out when you have lower lows and especially low of day breaks without any follow through. If you don't have follow through, zoom out. See if you can determine another reason or find some rationale as to why this may be a good area for a reversal. The lack of commitment in one direction is a vote of confidence for a move in the opposite direction. And we saw that here with some follow through. 13.95 low of day up into a 14.42 close is not a small amount of cash. That is it for today. Hopefully it was a helpful lesson for you. I believe tomorrow's lesson will be on Tesla and talking about some bear flags that actually occurred today. So thank you for watching. If you have any questions, happy to answer them, and I'll talk to you guys soon.